In this video, we'll be studying about the recording process and how accountants account for all the assets and the capital by recording them as journal entries into the books of accounting, as well as then communicating them throughout the other books of accounting. So our first step will be to identify how every element of the accounting entries is recorded. So first we have our assets. Our assets, when they increase or decrease, are recorded under a certain type of assertion. So first off, the assets, when they increase, are recorded as debit, and when they decrease, are recorded as credit. Similarly, expenses are also recorded in the same way, that when expenses decrease, they are recorded as debit, and when they decrease, they are recorded as credit. However, in the case of capitals, liabilities, and revenue, an increase in these three elements is recorded as credit, and a decrease in these three elements is recorded as debit. So for example, if you had taken a loan and you had paid out 30% of it, let's say for example, I took a loan of 3,000 rupees from Study Space and I paid out 50% of it, which is 1,500. So my transaction would be that I would record it such that cash would be credit by 1,500 because there would be a decrease in asset, and our loan from Study Space would be 1,500 debit because there would be a decrease in our liability. So now moving forward, we will look at the steps in the recording process. The first step in the recording process is to analyze, as we studied in the first chapter, whether a transaction is going to be debit or credit. The second step is going to be entering the transaction into the books of accounting. Third step is going to be transferring it from the journal to the ledger. Now, the reason for transferring it from a journal to a ledger is that a journal gives us a simple entry form like this, while a ledger would give us a more mathematical representation of our entries in order for us to calculate it more appropriately. The accounting flow that is basically followed by companies is such that we first enter data into the general journal, then into a ledger, and then into a trial balance. Now, moving forward, we will look at an example of a journal entry and then we will try to solve this question. So first off, as we can see that we've been given a few transactions that we have to go through before we can solve this question. So our first transaction is that Kate Brown opened a bank account in the name of the company and deposited 20,000 of her own money into the company. So the first step, the first thing that happens is that there's an increase in asset. So this is going to be debit, and since there is an increase in capital, it is going to be credit. Of 20,000. So first we analyzed whether an entry would be credit or debit. Then we wrote it down into our journal, and we will do the third step ahead in the further steps in the further part of this video. Now the second transaction was there was a purchase of equipment on account. On account would also translate into on credit, to be paid in 30 days with a total cost of 4,800, which means that an asset has increased by 4,800, and that a liability has also increased by 4,800. This shows us that there has been a change in the books by vis-a-vis the increase of assets and increase of liabilities. Now in case of the third entry, interviewed 3 people for the position of hairstylist, there is no monetary value to us. There has been no exchange of goods, there has been no revenue, and there has been no increment of expenses. Therefore, we will not record this as an entry. Now moving forward, we will look at what a ledger is and how it is written and how it is translated. So here we have an example of a ledger communicated from a journal. As we can see that this is our initial journal, right? And we have written a certain transaction here, which was the investment of cash. Now you can see that this investment of cash was then translated and communicated into a different account. This account is known as the journal account. In this account, the first column that we have of is date. Then we have an explanation explaining where this money came from. Here generally we would write owner's capital or capital, whatever you have named the capital account, and we would then debit the amount by which it has been increased. If it is, since in the case of an asset we would debit it, or if it were capital or liability such as in this case, we would credit it because there is an increase. And the third column and the last column is for a balance column. It shows us how much balance remains in that particular ledger account after all the adjustments have been made. Now this is the very basic format of a ledger account, and the purpose of a ledger account is to find out the remaining balance after all the month's transactions. So we can see an example here for a previous example that we did, which was Kate Brown. Now in this example, what they're asking us to do is they're asking us to construct a cash ledger account. Now this format that I've shown you in the example is called the 3-column format. In this, although a very common format, is not often used, so I'm going to show you another format of the ledger account, which is going to be a singular T account, which it is commonly known as. Here, as you can see, due to its shape, it's called a T account. We're going to write the currency symbol on the edge of it, and after we've done that, we're going to then enter our entry. So the first thing that they've told us is that there's a beginning balance of cash on March 1st of $600. So I'm going to write the date here, which is going to be the 1st of March, and I'm going to write down balance brought down of $600. right? And now the second entry that took place was on the March 4th, which was that cash was received from service revenue. So I'm going to write down revenue here, and that amount is 2280. Now other than that, what we had expenses which reduced cash on the 19th and the 15th respectively. I am just writing expenses for ease of clarification and for comfort, but when you generally enter an account, you have to write the full name of the account, which is like salaries and wages and utilities and expense. So I'm just going to write here in a bracket wages and utilities, right? So the first expense was for 400, the second expense was for 92. Once we've tabulated the month's entire expenses and transactions, we're going to look at the balance that would be brought down on the 1st of April, sorry. And that balance would be, just going to calculate this here, that balance would give you as 2388. So you can see this is why we use a particular ledger account. Now in the next part of our video, we will be learning about the last and the final part of our recording process, which would be a trial balance, and we will also be performing one last example with that. Thank you for watching and hope to see you again in the next video.